So how much income tax will you pay to HMRC on dividends you take out of a limited company post April 2024? Well, that's a great question. It's something I answer in this video, so go check it out. Hi everyone, my name is Simon Mishevich from Optimize Accountants. In this video, we're going to be talking about income tax on dividends that you might take out of your limited company. And there are multiple ways that you could take out money from your company by using wages, interest payments, dividends, and many, many more. So make sure you get the right tax advice. And you can get tax advice from us by using that QR code or the video links below to help you book a call with us, whether you need a new accountant or you're looking for just some tax advice. So let's talk about the income tax rates. And what I want to do with you is share with you 3 different years that I think is interesting. Because if you take actions on these different dates, that's 6th of April 2018 compared to 6th of April 2023, compared to 6th of April 2024, different things happen. So first of all is the tax-free element. You could, in 6th of April 2018, you could take out £2,000 worth of tax-free dividends out of your limited company, no problem. No income tax whatsoever on your self-assessment tax return. 6th of April 2023, you're going to be reducing that from £2,000 to £1,000. So all of a sudden it's been halved, but it gets more juicy than that because from 6th of April 2024, the amount of money you can take out of your company tax-free in the form of dividends is £500, which is bonkers, quite frankly, compared to the £5,000 it was years and years ago. There was also, let's not forget, there wasn't even a limit on the amount of dividends you could take before because the corporation tax have different rates. That aside, you now have to pay tax on these dividends, and the tax-free allowances are minimal. So let's think about what else we need to think about here. Basic rate taxpayers paid on 6th of April 2018 7.5% on dividends that they take out of their limited company. But from 6th of April 2023 and 2024, that income tax band is moved up to 8.75%. Wow, and let's think about high rates. And this is what I find fascinating. The jump from 7.5% to 32.5% is astounding. 6th of April 2018. But if you take action after that date, up to 6th of April 2023, 6th of April 2024, that band goes up to 33.75%, which is crazy. An additional rate taxpayers, 38.1% if you take out dividends out of your limited company on the 6th of April 2018, but it jumps to 39.35% on 6th of April 2023 and 6th of April 2024. A significant jump. Okay, so now we need to think about, for basic rate taxpayers, what does this mean? Now, if you have a limited company, you're taking out dividends. We talked about tax-free dividends. We're going to ignore that now. We're just focusing on the basic rate tax band for taking money out after that tax-free allowance. Now, we have to think about this. I'm going to focus on just 2 columns, which is from 6th of April 2018, and then changing from that date to 6th of April 2024. The income tax band is going up to 8.75% from 7.5%, an increase of 1.25% tax. Now, what's interesting about that is corporation tax is also increasing from 19% to 26.5%, which in effect means that if you're taking money out of your UK limited company, you could be paying 35.25% tax, which you could look at this and say, well, if I kept everything in my own personal name, I actually pay less tax at 20%. So thank you, but no thank you. That would be the wrong thing to do. So I want to highlight it because I want to answer your objection of this is a crazy way of investing in property using a limited company, but there's so much more you need to consider. And we'll talk about that a little later on. High rate taxpayers, you're going to be thinking I'm even more crazy, and feel free to call me that. Actually, please don't, in the comments box below. So high rate taxpayers, 6th of April 2018, things start changing when you hit 6th of April 2024. The high rate tax band is 33.75% from 32.5%. Corporation tax, we know is going to go to the top tax rate of 26.5% from 19%, which is 60.25% tax compared to 40% tax. So why am I talking about ever using limited companies? It's stupid, it's irrational, it's just not logical. Well, that's not true, is it? Let's think about this. I want to talk about Section 24, mortgage interest relief cap. Now, what does this mean? I want to compare 6th of April 2008 to 6th of April 2024, just random numbers, okay? Now, you could have had rental income of £50,000 in each of those years, same. Mortgage interest cost, £30,000, same. Taxable profit, £20,000, yeah, logical. 50,000 minus 30,000, yeah, that's logical. Thank you, Simon. Taxable profit, 50,000. Hold on, Simon, you've lost it. I'm sorry, you've lost it. What are you talking about? Crazy. Actually, that's what HMRC are doing, isn't it? They're saying that we're ignoring your mortgage interest costs and we're giving you a 20% tax reducer instead. Okay, so 6th of April 2008, you'll be paying 40% tax, which is £8,000. All right. But since Section 24 means that £14,000 worth of tax will be paid, which is 70% tax, 70. So not only are we saving income tax, even though these numbers are crazy, if you take out all the money out of a limited company, yes, I agree, it's not much in it, but you don't have to take out all the money out of the limited company. You could actually reinvest it, couldn't you? So you would then only pay income tax on money you take out. Not only that, but there are many, many ways of saving against capital gains tax and inheritance tax as well. So really, we need to think about the bigger picture here in terms of the tax savings that you can make using a limited company. But get some tax advice, make sure you do the right thing for you and your family.